Okay. Okay. Sorry about this, guys. This is a little bit of a technical difficulty. Let's see. Hello. For some reason... Oh, there we go. Bear with us, gang. Hello.
I was there like...
What happened? Okay, we're back. So just to reiterate, Ella is a financial advisor, and she covers all things from life insurance, income protection, contents insurance. What am I missing?
Landlord insurance, business insurance. Product, public liability, critical illness.
Okay. Sorry about this, guys. This is a little bit of a technical difficulty. Let's see. Hello. For some reason... Oh, there we go. Bear with us, gang. Hello.
I was there like...
What happened? Okay, we're back. So just to reiterate, Ella is a financial advisor, and she covers all things from life insurance, income protection, contents insurance. What am I missing?
Landlord insurance, business insurance. Product, public liability, critical illness,
everything. So somebody asked, does this vary from country to country in the previous chat? And the answer is yes.
Absolutely does. So every country will have their own legislation in place, and because it's a financial insurance as well, a financial product, basically every country has to regulate every single financial product. So for example, I'm regulated by the FCA. I work on behalf of a company called Unisure. And essentially what they do is they make sure that every single bit of advice or policy that I recommend to a client is relevant to their needs, relevant to their circumstances, and isn't a case of me trying to sell you mortgage cover if you rent, basically.
Right.
So it protects both myself and it protects the client, most importantly.
Amazing. So for me personally, what I wanted to do in this live is maybe talk more specifically about what I would need. So as an example, so Ella, basically anyone who's watching now, Ella can offer these services to you. I'll let her explain properly. But are you offering currently half an hour free consultations?
Absolutely, yes. So it's a free consultation, and then what it does is basically allow me to assess your circumstances. So for instance, in this instance here, let's just say I don't know you. You'd obviously introduce yourself, and I would ask you some key questions. So that's, if you have any dependents, smoker status, income, and any assets.
Let's do it. So I need insurance, but I'm not sure what I need, E. How can you help me?
Right, so first we need to understand, do you have any children, first and foremost?
No, I have no dependents.
No dependents. And what is your nature of your job? So are you salaried or are you self-employed?
So I own a company. I'm a director of a company, and then I pay myself from my company into my personal bank account as a salary. Yes.
Absolutely. So first and foremost, one of the insurances that we're going to consider would basically be an income protection, because whilst you may own a company, to a degree you're self-employed, you have to consider income protection, because you wouldn't be entitled to any sick pay in the event that you had to take time off work for an accident or being sick. So that would definitely
or a pandemic.
Or a pandemic. Do you have any assets?
Yes, I own properties.
Right, so apart from the properties, do you have any liabilities? So that's loans or credit card debts, car finance, mortgages, anything like that?
So I have car finance and I have a student loan.
Okay, sure. So the student loan, we don't need to take into consideration, but the car finance, is something that we would, because one of the big misconceptions in the UK is that your debt dies with you. It doesn't.
What?
So your estate is valued and your debt is deducted from the value of your estate. So something like car finance, if the company is in a position to recover the car, then they would then potentially write off the debt. If they're not in a possibility to recover the car, then the value of the car finance would have to be basically retrieved from your estate. Your estate is made up of assets, cash, jewelry, property, anything like that.
Jewelry?
Yeah, exactly. Okay. So valuable possessions, there's a lot. Obviously, if it's something that's been written down and it's not something that you've given to someone and whatever. But so the value of your estate, anything like that, that's how your debt is recovered. And debt is recovered first and foremost before anything.
Wow.
So what we would do is we would consider a income protection. I would consider a possible life insurance depending on the value of your debt to avoid that being passed over to an individual.
Wait. So if let's say my student loan is 25 grand, my debt.
Yeah.
So if I was to pass away, God forbid, one of my family members would be lumbered with that debt.
If they inherited any of your property, then
my God. Okay.
Debt would have to be away first. And then if there's something that's left to pay, sometimes in an instance, family members can then have to pay the debt if your assets can't cover it.
Okay.
So basically, so we would consider a life insurance to cover the debt. If you had any major liabilities, I would then recommend to you a whole of life policy. At the moment, you don't have any dependents. And also something like car finance isn't a major debt. If you had something like a mortgage, we'd want life insurance to cover the mortgage, absolutely.
Okay.
Or if you had loans or anything like that. The benefit of a whole of life policy is there's no term. It pays out irrespective of age.
Okay.
So a lot of individuals who don't necessarily have any children at the moment or anything like that take out a whole of life policy, because what it is it's a guaranteed way to cover your funeral costs, if you like, but also leave an inheritance. So in your instance, because of you, the end goal is to have children, get married, etc. It's a great way of taking out that policy now and guaranteeing an inheritance for your children.
Wow.
It's also a great of avoiding the funeral costs that a loved one would then have to basically be responsible for.
And anyone who's watching, guys, that's really a real thing. Like my ex-partner, his father passed away while we were together, and he and his brother and even his mum, who wasn't with his dad anymore, were lumbered with, I won't say lumbered because that's a horrible term, but like the responsibility of paying that debt was left to them, and none of them were really in a financial position to be able to afford that. So they weren't able to give their dad the funeral that they maybe wanted to, you know?
That's the thing. Well, exactly. That's the biggest problem, is that people don't appreciate, you know, like if you take your direct debits, for instance, we've got direct debits, whatever it may be, car, finance, insurance, gas, electric, whatever the household would be. And then those little ones like Netflix or Apple.
Oh, they add up. Ooh.
And that's the thing. And if you take into consideration, if you're someone that, even if you're 18, 19 years old, if you look to your immediate circle and you say, right, I've got my friends, I've got my mum or my dad or my husband or whoever it is, if I pass away tomorrow, have they all got 15K, 10K, 5K, boom, to pay for my funeral?
Yeah.
If the answer's no, for the same cost as your Apple subscription, your Netflix,
which let's be real, how many of us actually get our money's worth from those things? Maybe Netflix now in this time, but Apple Music, I really had to check myself because I had Spotify and Apple, and I just had been off. That's £120 for the year. That does nothing for me.
Yeah.
Whereas if I was to be putting that towards life insurance or contents insurance or, you know, a protection policy of some sort, I'm not going to feel that dent in my pocket.
Exactly. And I always say as well, think of any type of insurance you have as a core expenditure. So if you get paid on the 20th, the same way you've made your bills all come out on the direct debit on the 21st.
Your insurance should be part of that.
Exactly. It's not something that you toy around with.
It's not a luxury.
it's not at all. And I'll give you an example. I had, when I bought my flat, I had life insurance. And I took it out to cover my mortgage because literally in my head I was
amazing.
So I literally thought to myself, probably should get life insurance now because you know what, if anything happened, I've worked hard for my flat. I'm not trying to lose it, even though I can't benefit from it. Let it go to someone. I got made redundant, wasn't having an income or whatever. It was the first thing I cancelled. I thought, whatever, I don't need it, forget it. And then, of course, I had my son.
Yes.
And then I was like,
what am I doing?
I didn't have life insurance, and something happened. My 1-year-old isn't covering my mortgage. So the government retrieve the property because the mortgage has to be paid. They sell it off at auction. That's it. Bye.
Which is how I got my property next door to yours.
See what I'm saying? Exactly. And that's literally how it happens. They retrieve the asset in order to cover the liability.
Wow.
That gets paid off by the mortgage company and they sell it off at auction for, you know,
a fraction of the price.
Exactly, as you know, for a fraction of the price. So that's all your hard work that you did whilst you were alive gone to waste. Yeah. And so that's when I was like, whoa. That's why I say it's a core expenditure. Don't even play around with it. Like it's something that's mandatory as far as I'm concerned. Like every day, it's the one thing in life that's promised. It's the one thing that every time you step out of your house, even in your house, you're constantly at risk without being morbid. But, you know, we all think, oh, what's going to happen to me? I follow the Green Cross code. I use traffic lights and etc. What's going to happen? But it does. And then God forbid, everything that you worked hard for, that's it. That's gone in an instant. Or someone becomes financially dependent or financially responsible for your funeral. There's too many GoFundMe these days. Too many. Like, it wasn't even a thing, and now it's a thing.
Yeah.
Do you know what I mean?
Because people are not properly protected because people don't get this information clearly, authentically. They feel like they're being sold and missold. And that's one thing I wanted to talk to you about is, for me, insurance scares me because my grandmother's 83, 84.
Sure.
Every time there is something wrong with her home, the insurance finds a way to loophole out of paying her out any money. And I wanted to ask you how you know what is when a policy is trying to like do you over, basically.
So the best way to go about it, without plugging myself, is to speak to a financial advisor beforehand.
Yes. Because
the problem is with these types of products is you don't just go and buy something without considering it beforehand. But if you've got the benefit of speaking to someone who's trained in the field, who has the experience and who has direct relationships with those providers, then the best thing to do is to speak to that individual, because they will then know all of the reasons according to you and your circumstances why your policy wouldn't then pay out in the event of the claim. And for example, there's a big misconception that providers won't pay out, but they're businesses with reputations just like all of us, and they pride themselves on paying out on claims. For example, Aviva's last year, their percentage on claims was 98.9%.
Oh wow.
And the 1% that they didn't pay out was due to misrepresentation. Representation is when you, maybe through no fault of your own, but when the individual filling out the policy hasn't been either honest or factual in the information that they've given.
So, for example, when they ask you for your car insurance, where is your car kept overnight? And you lie and say in a garage, and then they come and check and you have no garage. They're not going to pay out if your car is broken into, because your policy, the amount you were paying was based on, and the amount they were planning to pay out was based on, that has now been proved as untrue. Okay.
Exactly. Like, for example, you saying that your house has been broken into, but part of your home and contents policy was the lock on the door, and you left it unlocked.
It has to be locked, and it was left unlocked. Right.
So it's just those that basically that can potentially not necessarily void a policy, but yes, those are the issues that people come across. And the problem is as well is a lot of people think, let me not be entirely honest because I'm worried that I can't get cover. Or if I'm not entirely honest, then that small thing won't be an issue. Listen, If you have a pre-existing condition, it doesn't always mean that the policy or the provider won't cover you. What they will do is they will either say, we will cover you, but we will basically check in on you in the next couple of years that you are experiencing is still an issue.
Okay.
What they may do as well is they may say, we're more than happy to cover you for a particular issue, but we're going to increase your policy by a little amount, take into account this issue. Or they will just say, we can't cover you for this issue, but we can cover you for everything else.
Okay.
And that's why it's so important to be...
Yeah, honesty is key. One thing I wanted you to explain on here, which I saw on your channel, on your Instagram, was the income protection. And I feel like the example that you gave was so clear. I feel like a lot of people will be able to understand it and understand why it's so important. So would you mind going through that again with me? So for example, let's say, I don't know what off the top of your head, is the 24K, you know, like all the numbers and stuff for that specific?
I think I used that one for easy maths.
Yeah, that's what I mean. So let's do it for easy maths. So let's say I earns 24K a year and I've just been made redundant or I've just lost my job. How would income protection help me?
So basically, it depends on the policy. So if there's the possibility that you can be made redundant or anything like that, there is built into the policy something called accident, sickness, and unemployment. So in that you were made unemployed or you had an accident or you were sick and you don't get anything, then what it is you can claim on your policy. The sum assured is up to 65% of earnings. For example, 24K, and just for easy number's sake, let's just say you're bringing in £2,000 a month, 65% of that, £1,600, you'd be able to receive the £1,600 on your policy, because theoretically the reason why they use 65% as a calculation is because out of everyone's income, 65% of it is attributed to expenditure, bills and etc.
Yes, and necessities.
Exactly, and then the other 35% is an average of disposable. So it's a great way of basically saying, I can't work, I've got no money coming in, statutory sick pay is £94 a week, not going to survive on that. Yeah, £94 a week. What?
Oh my goodness, my brain hurts. My brain hurts. Okay.
And in universal credit, the standard allowance is £312 a month.
Wow. This is shocking.
Yeah.
This is shocking, and I'm actually shocked. I'm upset with myself that at 31, I've never even really considered these.
This is the thing, again, it's all of these small things that people aren't aware of. And because life insurance or income protection or critical illness isn't mandatory, you don't necessarily need to be taught it in schools.
Yeah.
You don't necessarily need to. Even your mortgage broker, like, for example, the broker that I use didn't turn around to me and say, oh, you've got a mortgage, you might want to consider getting insurance, you know, to protect it in the event of the worst. It's not mandatory. But you literally, the same way you will take your clothes to the dry cleaners because you don't want to put it in the washing machine in case something happens. The same way you've got car insurance for your car, or you've got phone insurance for your phone, or you take out travel insurance when you travel. You should have insurance for your income, because without your income, how do you survive? You should have it for your life. Depending on what type of insurance it is, again, speaking to an advisor, you'll know, because it's not a one rule fits all. It varies from person to person, but these things are important. So the same way you insure your phone, insure yourself.
Yeah, absolutely, because without your life insurance or your income insurance, you're not going to be able to afford your car insurance, your Netflix, your gym, everything that we do and we believe is part of, like, whatever your lifestyle is, whether you live on the very basic end and you don't have much expenditure, you still need cover.
Yes,
basically, absolutely. The whole point of this live is you need to be covered in some way, shape or form, dependent on your circumstances.
And again, there's a conception that insurance is expensive. Car insurance is expensive.
Yeah. Didn't you say that income protection is like 1% of your earnings for the year?
It can. So that one in specific for parents leaving an income for their children. So if you take a parent, let's just say you've got a household, mum and dad. Dad's earning 24K, mum's earning 24K, household income's 48K. They've got 2 kids, Harry and Hattie. And in the event that one parent passes away, that 48k household income now becomes 24.
Yes.
So all of their lifestyle, luxuries, amenities, necessities, etc., is now dependent on one salary and not the other. So having a family income policy, which is a life insurance policy, but it's basically a family income, pays out an income every single year until the children become dependent.
Wow. So does the UK count dependent as 18, or is there a certain age limit?
You can, so the UK class dependent as 25.
Oh, wow.
Exactly. So it allows the child to go to school, university, graduate, and then potentially get a job. But if you yourself actually wanted a policy until your child was 30, we can increase 30. If you actually thought, you know what, I want a policy until my child's 18 because I'm in a position to do so, then you do it until the child's 18. But it's a great way of saying, okay, God forbid, worst has happened, and you can't put a price on life, but what you can do is try and lessen and soften the blow the other. And what that does is 24k, parent has died, we're now relying on 24k, but mum had life insurance, back to 48k, life can continue as normal.
That is for the term that was set. So just to be clear, guys, that 24k will be paid out every year until the end of that policy. So if you pass away, God forbid, but if anyone was to pass when their children were 5 and they take out the term for 20 years, that household for 20 years will receive that income for a fraction of the cost.
And that's why I use the example 1%.
For 1%.
24k, I'm telling you now, it's less than £20 a month.
So for £240 a year, you can guarantee that your child will receive, in the event of your death, or in the event of your income being stopped for whatever reason, let's say an accident that allows you to work, for example.
Yeah. So it needs to be, exactly. You need to claim on your income protection policy. You get 65% of your income coming in. If a parent passed away, the sum assured, let's say it's based on their salary, 24k, then they'd receive their 24k every single year. And a lot of people as well, they think, but suppose nothing happens. I get to the end of the term, what?
That's a good question. What happens?
If you speak to an advisor, there are conversion options. You don't have to lose your policy.
Right. And you don't lose all that money you've been putting in the pot, basically.
Exactly. And bear in mind as well, think of insurance as an investment. If you're speaking to someone and you're calculating it properly, the amount that you are covered for, so the benefit, the sum that will be paid out, let's just say 100 grand. Over the length of your term, what you're paying every month is never going to exceed 100 grand. Otherwise, why would you take it out?
Yeah.
You know what I mean?
Makes no sense.
Exactly. It's going to be a fraction. I did a quote for someone today, and it was a quote for 200k life insurance. And the total amount that they would pay out over the cost of their term was 4 grand.
Oh, wow.
4 grand.
Wow. And let's be real, there are boys popping bottles and spending that on a club table. There are girls that will spend that on, our makeup bag is probably 4 grand. Or, our car.
Easily.
Wow.
Even the amount of money that you spend on a particular product, but it's throughout the year, can easily be 4 grand, 8 grand, 12 grand.
Dinners. Eating out.
Yeah, exactly. So
I'm stunned by that.
Yeah, it's so cost effective. And again, you make it as cost effective for your circumstances. If you look at your bills and you're earning £500 a month, and you're like, okay, £500 a month, but I need to know that I'm covered because I know my mum and dad can't afford it. Because a lot of young people assume that they need life insurance as well. But that's why I use the example. If you've got an Apple subscription or you've got Netflix,
a gym membership that you're not using.
For £5, you can get cover for as cheap as £5.
Wow.
For a month. Week, that's £5 for the month to take care of you if anything. So it's so cost effective. You do what's necessary for you in your circumstances. It's not, I want everything.
One size fits all. Yeah.
Exactly.
There's a good question. It says, are there any tax implications for a life insurance payment to your family?
So that's a great question. So again, you pay inheritance tax when a family or next of kin inherits anything above the threshold. So for property, it's 350k, and then I think for valuables and cash, it's basically around about 70 grand. So if you have a policy, for example, and you want them to avoid paying inheritance tax, leave the policy in trust.
Oh, wow.
Policy paid out is paid out and used for exactly what it is intended for, going to the in. Again, so if you are a single parent and you basically not have a relationship with the other child's parent or whatever, but you raise the child as you're a single parent and you take out a policy, I would recommend, and if you speak to an advisor as well, they will tell you, or they should tell you, you leave that policy in trust. Because if I'm going to be 100% frank, if a parent away, it is not instant that that child immediately goes to the other parent or who you think will be the best next of kin.
Oh my goodness.
Social services determine that.
Oh my goodness.
That's the thing. If you leave a policy in trust, you're in a position to choose someone who can then basically allow that money then goes to your next of kin.
Oh.
So, for example, if I left a policy in trust and I wanted the trustee to be Tia Ward to look after, to ensure that the money is paid then to my son as an income every single year to ensure that happens, that's how you could go about it. So it avoids my son having to pay inheritance tax because he inherited my property and the life insurance policy, so that now takes him over the threshold, and it means it's designed exactly what it's intended for. Money for him, not for him to pay 40%
of whatever was left for him.
Inherited. Exactly.
Okay, so just to reiterate, what is policy in trust?
So leaving a policy in trust is a legal arrangement that allows for the policy, when the sum of money is paid out, to be used exactly what it is intended for. So it avoids inheritance tax, and it means that the funds go directly to the next of kin without them having to pay inheritance tax because the value has taken them over the threshold.
Amazing. Wow. And then so that was for sort of life insurance and income protection. Are there any other sort of insurances that you feel, I mean, your circumstances have changed a lot in the past few years. You've had a baby. Do you feel that there are anything for our sort of generation or younger that we don't consider that maybe we should?
Critical illness cover.
Critical illness, okay.
Critical illness purely because the cancer is on the rise, heart attacks are on the rise, strokes are on the rise, all of those things are on the rise at the end of the day. And you can have a policy that can pay out until the age of 85. 9 times out of 10, if you get diagnosed with this, it's going to be before the age of 85. So my thing is basically, if you're going to work every day and you want to be able to eat what you want, live how you want, and etc., that doesn't basically detract from the fact that you could still get diagnosed with any form of critical illness. And so by doing so, by having a policy in place, it just softens the blow the other end.
Amazing.
You doesn't mean that you have to pass away from it. 9 times out of 10, if women are diagnosed with breast cancer, then they can have the lump or tumour or whatever it is removed and make a full recovery. If you've got a critical illness policy in place, you know, that lump sum of money that you've been that's been paid out to you because it's tax-free, like I call it compensation. You know, God forbid you got diagnosed with breast cancer, you're not feeling yourself, you've had to take 6 months off work, and the sum assured was equivalent to a year's worth of income. You're earning a 35k salary. Boom, that's it, 35k paid out. You want to go and buy a whole new wardrobe? Go buy it.
Wow.
You want the rest of the year off because you need to recover?
You can do that.
You can do that. Do you know what I mean? And how many people, if we look to the left or the right of us, know someone that got diagnosed with a critical illness? Irrespective of their age.
Yeah,
irrespective
absolutely.
Of their age.
Absolutely.
So it's things like that. Again, income protection, you know, it's not even that mental health is on the rise. It's just that we're talking about it more.
Yes, absolutely.
But we know how common it is for an individual to, and especially in this circumstance now, we've got so many pressures. You know, how common is it for someone to need a good 4 weeks off work because they're just overwhelmed, you know, and your doctor signs you off? Without an income protection policy in place, you're relying on sick pay. You know, you're diagnosed with depression, but you're not in a position to work. You're signed off work for 4 weeks. You're not earning an income. So now you're sat at home, not only feeling horrible, but now you've got financial stress. You can't afford to pay your bills at the end of the month, but you can't bring yourself to get up and go to work because of whatever trauma or turmoil you may be going through. You've got an income protection policy in place. It softens that blow. And another misconception is a lot of the providers have extra benefits. They've got Bupa health lines. They've got consultants. They've got specialists. All of that on hand for free. It's built into your policy.
Wow.
You know, you don't necessarily want to go to your GP. You can speak to me and say, right, what's the contact number for the helpline that I can speak to get some further information or advice surrounding X? Go for it. Ring them. That's what the policy is there for. So, you know, it's not just pay for a policy, get paid out. There are so many extra added benefits that can help you on your way through life.
Yeah. Wow. So, with all of this being the case and the information that you've given, you offer these services, and you can offer these services for anyone watching. They can get in contact with you, and you can discuss individually with everyone specific individual needs are and how they can be protected.
Yeah. So someone wrote in the comments, nothing is free. I'm free. My service is free. Okay? I work with all of the providers, every single provider in the market. Okay? So that's the whole market. There's not a provider that I don't work with. I have a relationship with them, and that's how basically I get paid. For me to work with my client, that is free. And I'm not just a one-stop shop. I'm just not going to meet you today and have a conversation with you today, and it's a case of, okay, that's it, bye, you got insurance, great, see ya. No, I'm there for life. You know, every couple of years, I'll be checking in. It takes a good 4 years to have like a sort of a life change, a circumstance change, whether you're having a baby, getting a mortgage, getting married, buying property, losing property, raising salary, dropping salary. You know, so all of those sorts of things, I'll be there to check in and say, right, just checking in, has anything changed? Are you still happy? Whatever it may be. Did you end up claiming on your policy? What's your health at the moment, etc., etc.? We need to review things, we review it. If we can be left in place, we leave it in place. But it's not just a case of, you know, saying, okay, that's it, bye. You've got a financial advisor for life. Use them. Yeah.
Amazing. Somebody asked, what's the average amount of time you have to be paying a policy before you can be paid out?
Usually it's within like a few weeks or about a month, I would say, if that, depending on the provider. Again, depends on the provider. They all have their own sort of stipulations in place. But for example, where we say we had completed this consultation today, again, you sign over your policy all via email now because of COVID-19. So
Corona,
exactly. Everything's done digitally, and then email your policy over directly to the provider and head office. You'll be covered pretty much. If there's no further questions to be asked or anything like that, you can be covered within 24 hours.
Wow.
Without even necessarily paying your first direct debit. A lot of providers will give you cover immediately before you've even paid the first direct.
So question relating to these, which I think a lot of people might need to or want to know, or not even know that they need to know it until it's told to them. If, for example, if I've lost my job during this time, if I've been laid off, what can you do to help me now that has already happened? Corona is already a thing. I know we spoke about people not insuring, obviously, off the back of pre-existing conditions or like a pandemic already having started and you already having been laid off. But what could be done?
So it would depend on the individual. We definitely have a conversation, and I would say let's have a look at all of the creditors who is basically looking to get paid from you, what bills, debts, and etc. What arrangements can we put in place? If you're a business, there are loans available to you at 0% interest for a year. There's things like that you can potentially take out, mortgage payment holidays, but again, all dependent on the circumstances. If you're someone that's looking to take out credit within the next 6 months, I wouldn't recommend a mortgage holiday because it can potentially impact you. And then it would be a case again at looking at your circumstances and seeing what funds can be available for you. So yes, you can take out cover, and if you met the parameters of the cover after the event for in the future, then fantastic. If you're someone that's already been made unemployed, then claiming on an unemployment policy wouldn't work because it's already happened. But it doesn't mean that can't have a conversation and that I can't still advise you. We can absolutely have a look at your credit file. We can just have a conversation with different lenders and see what holidays or payment plans we can put in place. There's so many things that can be done, and there are things that the government are offering that not everyone is aware of. It's not always just a case of relying on universal credit. Loads of things, even just a conversation about your finances. A lot of people don't take into consideration things like emergency funds or sinking funds. They just think, oh, I'm going to try and save.
There are so many people right now that don't have to pay their mortgage or their rent or their car insurance or any of these things. So this is why what you do is so important, and I wanted to get it out to as many people as possible. I know this isn't particularly an interesting maybe topic for people on Instagram that want to know about eyebrows and and you know, they're saving you now, honey. They're really not. You know, what is painting your eyebrows on today going to do for you in the long term? And you're happy to spend £24 on an eyebrow pencil or £50 or £70 on a foundation, but you don't want to make that investment in yourself and protect your future or your children or your mum and dad having to pay for your funeral, for example. So I just wanted to say thank you so much. I've learned a lot on this, and I will be having a proper, more in-depth discussion about my financial situation with you. Ella's a great friend of mine. For anyone that hasn't followed me for a while, you maybe have. If you have, you've seen E on my YouTube or on my Insta before. But if you're new here, Ella is a very diligent human being. No matter what she puts her mind to, she's passionate, she cares genuinely, and she is ready and willing to answer your questions personally. So if you head over to her page, is your information up there? Your information is up there for everyone, right?
If you want to drop me an email, the email is there. If you want to send me a DM, and then we can have a telephone call. I've got a child, so any parents that want to have a conversation beyond 9 o'clock, I get it. I'm here. I'm available. Anyone who wants to have a conversation first thing in the morning, or you want to book in a time to have a conversation. And again, like, no obligation. I'm not here to sell insurance. I'm here to advise. As long as I've given you the information, then my job's done. What you do after that, that's on you. So yeah, just drop me a message. I'm happy to help.
Amazing. A couple of people have asked if we could do if people are saying they would pay for the information. In my brain, when I'm back in London and all this is over and we can actually mingle with each other again, maybe it would be fun for us to do something like a little workshop where...
Absolutely. Love to do an event. Again, I've got mortgage brokers on hand and things like that. The aim is definitely to do some sort of financial event that everyone can come to and just get some information and walk away, learn how to create an emergency fund, how to, what then makes it valuable to them at the end of the day, and just, all of those sorts of things. That'd be good.
Fab. I'm trying to think, is there anything else? Any other questions? Or somebody asked about pensions and keeping all your pensions in one place. Is that something that you can advise on?
Yeah, as well. And basically, it depends. Again, it depends on the circumstances. A lot of people end up getting a pension with a company and then end up leaving that pension and then forgetting about it. Sometimes it can definitely help. It will still get paid out to you, but sometimes it can definitely help to get a central pot, because then you're in a position to contribute to it as well, so you bump up the amount that you get paid the other end. But again, depends on the individual, depends on the amount and things like that. Personal pension, if you're in a position to get one, I think it's a great idea. If you're in a position to save, really and you're really frugal and really diligently, great idea as well. If there's anyone in the comments that has insurance with their employer, then all I want to say is, are you looking to stay at that employer forever?
Okay.
Because guarantee if you leave the employment, you leave the insurance behind.
Oh God. Okay.
Exactly.
Oh man.
Just things like that. Do you know what I mean? Little things like that. Even if you've got cover in place as well, I'm more than happy to review cover that people already have.
Oh, amazing.
Again, yeah, absolutely. Some people get cover in place, they take it out, and they completely forget that they remortgaged, increased the value of their mortgage, but the cover that
changed their policy.
Changed it.
Right.
Little things like that. So just hit me up, man.
Yes, he has all the answers, guys. I know there are a lot of questions coming in now at the end of this, but head on over to Ella Insures, and you'll be able to get the most out of a half an hour telephone consultation with her, where she can be honest, give you specific stuff for your personal circumstances, and hopefully get you protected very well.
Yeah.
And you're so clear, like you're so good at what you do.
There's a lot of information to digest, but I hope so. That's why I break it down. Like, that's why I say critical illness compensation. Do you know what I mean?
For sure.
Personal sick pay.
And even for somebody like me who doesn't have a child yet, God forbid anything was to happen to me before that event, I would like my property to go to my brother or back to my mum, like, or to, you know, one of my loved ones, even a friend, rather than the government. No thanks. Yeah. No thanks.
Do you know what I mean? Like, work, I paid all this money.
You don't tax me 40% anyway, and then you want to take an extra 40% for anyone else to inherit what I've worked for. I'm basically left with 20% of what I've worked for. That's wild.
Exactly.
That is wild.
I mean, some people they don't necessarily have a conscience, and they think if I'm dead, I'm dead. And you know what? That's fine. There's nothing wrong with that. If you're okay with that, then that's absolutely fine. But there are other people that were like, no, I may not be here, but
yeah. And also another thing I feel like you will be able to do is anyone who has been saving diligently and is now we're in this position, the market is going to be affected. The property market will be affected, I'm sure. And maybe he can direct you the best way to spend that money wisely, or to, you know, get your mortgage at a great rate, or, you know, you'll what's going on right now and how you can get the most.
Absolutely, yeah. The market is definitely going to be affected, and for a while. Yes. Don't anyone think that we're coming out quarantine in 4 weeks and it's boom, we're going back to normal. No. Yes. It's going to be struggle gang for a little while.
Amazing. So just to conclude, this is Ella. Ella is a financial advisor. She covers everything, and anything that she maybe can't answer, she'll know somebody who can. So head over, get your questions in, get your consultations in, and I hope this has been helpful. It's really helped me. Thank you, genuinely. And I can't wait to see you. For anyone that doesn't know, Ella and I basically live next door to each other. So yeah, I'm so grateful to have
you outside now. Look,
party done. But yeah, everyone, get over there. Ask your questions, and thank you so much. I appreciate you. And this will be live on my channel for 24 hours. And yes, there will be something of some sort for me and some sort of workshop that we'll bring to you in the future when we can.
Yes.
Yay. All right, my lovely. Have a good rest of your evening. Love to baby. And see you soon. Bye, guys. Bye.